Today, we look at what creative ways you can use to cover your estate. Should you start a business or buy a life insurance policy? What are some benefits that come along with buying a whole life insurance policy? Use the hashtag PastorJD03 or JD03 podcast to join this great discussion. And now, to the podcast. Don't think of the life insurance as a bill. Think about it as an investment in the future that is going to help your next generation extend its legacy. All right, so he says, look, when you think about what your future is, right, or what your estate needs, it needs to be able to replace two things. And he says that's human capital and that's financial capital, right? The human capital is your presence, right? What you add, that's the wisdom, that's the teaching, that's the ability to work that you have, where you can go out and you can take on a second job and you can replace the income that was lost, maybe because you had to take a loss on the business, or maybe the franchise closed and you had to reposition yourself and to shift your thinking around a little bit. And so he's like, look, that's that human capital, right? That you can always put yourself back out there and to add more back into your family as an earner, right? Then there's the financial capital. Maybe you're still working, but you do not earn at the same rate that you used to, right? So that financial capital, maybe the money that's coming in from your business that is not fully debt-free, but it is still bringing in income to your family. So that's something, it's financial capital. It adds in to what is sustaining and building your family. Well, brothers and sisters, if you pass, then your family loses that human capital. And if you pass, your family also loses that financial capital. So if you're not at debt free, those two things are now removed from the equation, and you may leave a spouse, if you have a spouse that is a stay at home and or that is retired, you leave that person now without a financial response. They're limited on their financial response because they have to respond as one as opposed to responding as two. And then also because they're responding as one and not as two, they're also limited from the financial aspect of what can be added. And if you are the one that is the highest degree or the largest earner, they are also able to go out and earn more, but they're going to accumulate or to earn at a lower rate or and at a slower pace than you were earning, right? So it's not that they cannot earn or not that they cannot work, but they're not going to work and earn just as you have earned. And if you have amassed everything around your ability, around your degree as or your connections, then when they are left unto themselves, they will not be in a position to replace what you bring to the table, despite their hardest or their greatest efforts. And so then what will happen is they'll be in a position where they will go out and work hard, but will not be able to sustain what you have brought to the table. And thus, because of that, they will find themselves in a position where they may have to liquidate the things that you have brought to the table that were a blessing to the family. All right. And so you want to make sure that you are thinking along those lines, right? So if you have dependents, children, spouse who will suffer financially if you die, life insurance, according to Eugene Mitchell, is a necessity. It is not an option. It is a necessity. So we need to figure out, brothers and sisters, how we can take care of our families. All right. So let's get into some of the pieces that he have. Look. This is something that I put a bracket around. If you are older and or your health is not great, don't give up hope, as you may be able to attain a guaranteed final expense policy from one of the major insurance companies. And he said, look, these policies may typically be between $2,000 and $20,000. So they are not major policies like the $1 million or $500,000 policies that you probably should procure to advance your family. But if you are in the later stages of life and you don't want to have your family putting out a GoFundMe or putting out your Cash App, are putting out their Cash App to try to put you in the ground, you want to go ahead and look at where you are from a strategic stance and to look at what you can do to help your family avoid having to sell chicken dinners, fish dinners, cut grass. Come on, y'all don't want your grandson out there cutting grass, trying to pay off that policy. Y'all don't want your family to be out there having a car wash. Come on now, some of y'all, you know what I'm talking about. You're going to have a family out there doing a car wash, trying to pay for and cover the things that you did not cover. Amen. And so he's saying, look, you want to make sure that you look at these things and consider these things as you are planning, and don't give up. Go for it. There is something out there that can help you to cover what you have taken a responsibility for. So he says, look, there's some things that you need to look at how you create your estate, how you divide up the pie. Of course, there are many different things that go into this, but we don't want to get into the specifics of it, because how you divided your pie is how you divided your pie. The most important thing that you want to look at now is, how do I cover and what do I need to maintain? Maybe there's some things in the pie that are taking resources that you're covering things with that you may look at and say, you know what? This is really not that important to the grand scheme of what I'm trying to build for my family. So I can release this asset, I can sell this asset, and then I can take the money that I gain from the sale of this asset, or take the money that I have monthly invested in using this asset, and I can put this back into the pot, and now I can reposition myself to get a policy that will cover my family a lot further than what this asset would be. That includes businesses. I know I included want to go back and start another business. I enjoyed, even though it was crazy as all get up, I enjoyed owning a franchise, and I would have loved to pass a franchise on to my family. But you get to a specific point where you say, look, if I take out this business loan on a $20,000 loan is going to cost me $400 a month, right? So I'm going to put this $400 a month into building this business that is going to generate money. How long does it take to stabilize a business? Well, statistics show it's going to take anywhere from 5 to 7 years. How much of that business becomes self-sufficient and becomes a viable income-generating asset? And that's going to be anywhere from 5 to 10 years. So you may start to look at yourself and say, okay, look, what is the income-generating potential of this business, even if I were to get this business over the hump? And you may decide, hey, look, at the very, very most, even if I could survive and establish this business, this business has a potential of adding about $20,000 to $30,000 worth of income into my family. And is that great? Yeah, $20,000 or $30,000 is great. But when you look at the fact that you may get a life insurance policy that would pay out your family $1 million, and that may cost you $150 a month, then you look at that business and say, you know what? It would be great to be able to pass this along, but right now it would be more responsible for me to take out this policy and to invest in this policy that's going to guarantee that my family receives X amount of dollars at the extinction of my life or at the losing of my life, than it will passing them on a business that maybe fails, or that maybe survives but only gives them $20,000 at maximum every year, right? So I could take this policy and to have a greater impact doing this than I can be investing in a business. Now, y'all know I still am going to try to start a business because I really did love it. But at the same token, you get to a point in age where you start to weigh the things and you start to look at the cost, and you start to look at the bigger picture and what you can do, and you may decide, even though it has been your dream and your lifetime desire to own certain enterprises, that right now for your family, it's best that you put dreams, desires, and ego aside and to do the thing that is responsible, because That's what being a good steward is, people. And being a good steward does not mean that you get to buy or to do everything that you want to do. Sometimes the best thing that you can do for your family is say no to you. And so I want to encourage you to look at your position and to then determine from the position that you're in whether it is the responsible thing to do to actually build out what you have intended to do. It might be something that actually sets your family back further because of your lack of foresight, right? And lack of insight. So he says, look, you can capitalize on the benefit of insurance because there are some hidden benefits to insurance that are often not looked at. Sometimes he says, look, we just look at how much is it going to cost a month and how much will my family get? And he said, look, there are some other things and other reasons some of our other counterparts buy these life insurance policies, right? And one of the things that he lifts up first is life insurance dividends, right? So there are some policies that come with life insurance dividends, right? So for those of you who are in the stock market, you know, it's a great thing. Some of your accounts may have dividends that come along with it. So you make a purchase, and along with benefiting from that stock price, when there is an overage, and this stock will pay you back off some dividends. And may not be phrasing that right, but one of mine does the same thing. And it's not always a lot of money. It may be $2, it may be $3, it may be $4, but it's something that you didn't have, right? And then you can take that and roll that right back in, cash it, and put it right back in and say, oh, let it roll. Let's go invest it in something else, right? And let's start something new, or let's take this dividend money and not put it back into our bank account to spend on some things, but let's take this money from these dividends, let's make it liquid, and let's take it and invest in something that we do think has potential, but we just didn't want to take a risk on because it was maybe not as moderate as we wanted it to be, and we wanted to do something that's a little aggressive. So now you can take that dividend money, you can turn it right back around and take a risk with the dividend money. And maybe you end up coming out on the back end with something greater, right? So the next thing he says is, look, you have investment guarantees and there are some tax advantages. So I'm going to read off these tax advantages so that you'll have these documented. And if you can, get the book. Support the brother. I'm going to tell you, I'm glad that Thriving had him on one of their streams. His book has been very, very resourceful, very enlightening, and then also very challenging as well, because you have to look at yourself. It's going to make you ask some questions of yourself. And sometimes it's not a pretty picture, but you do want to ask these questions. So tax advantages. It says, look, whole life insurances, this is under the investment guarantees. You have some guarantees, and then you have some tax advantages. He says, look, whole life insurance policies provide a guaranteed death benefit so that beneficiaries will not receive less than the amount on the life insurance policy. And so that means if the policy says, if it's a whole life policy, he says, if that policy says it's $1 million, guess what? It's $1 million. And it's not a taxed $1 million. So you say, oh, you're going to get $1 million and they get back $600,000. He says, no. If it says that it's $1 million, your family will get $1 million. And so that's something that you want to keep in mind. The whole life policy premiums are guaranteed never to increase regardless of your health, the economy, or your age. That's something that you should consider. Remember, we talked about that, not last week, the week before last. We had issues last week. But he talked about this. Look, no matter what happens to your health, the premium stays the same. And that's why he wants us to make sure that we get this life insurance policy as young as you possibly can. Because if you get it right now while you're 24, 22, 21, 25, whatever it is coming out the gate, invest in their 401k, go down, get the life insurance policy. I know you ain't got any kids. You're like, I don't have any kids. Why should I get the policy? Get the policy. Because when you have kids and when you have this estate that you have to take care of, you will have $1 million policy for the rest of your life that you're paying $35 on.
Next week, we look at the struggles
of leaving your family with one income and unpaid debts? Should you start a business? Purchase the land? Purchase the stock? What are some hidden benefits that accompany a life insurance policy? Use the hashtag PastorJD03 or JD03 podcast to join the discussion. I'm Johnny Ogletree III, and I look forward to speaking with you next week on Pastor JD03, the podcast.